Lenders hate this. Look, I want to dive into the top 5 reasons that your business loan, credit card, or credit line application is going to get denied. And I'm actually going to break down the things that lenders despise the most that will get you denied and the things you can easily and quickly do to fix it to exponentially increase the probability you'll get approved. We got a lot to cover, so let's dive in. Look, there's a lot of reasons that lenders may deny your application for credit or financing, but believe it or not, almost all denials fall into 5 categories. And the interesting thing is that these are things you can easily change. If you just know these reasons for denial, there are simple things you could do to turn the table and have a significantly better chance of getting approved. But it's not just about getting approved. It's about getting approved for optimal capital. I'm talking about getting more approvals, better terms, and higher approval amounts. So here's the top 5 things that lenders hate the most, starting with number 1, little or no business credit established. Look, having business credit established is as important to your business getting money as you having consumer credit is for you getting money as a consumer. So if you think about it, imagine trying to get a mortgage, a car loan, or even credit cards having no or even bad personal credit. Well, that's exactly what a lot of entrepreneurs try to do for their business. They're trying to get business loans, credit lines, or credit cards with no or bad business credit established. You can't do this. It's really easy to actually establish business credit if you follow a series of steps. So first of all, go and get our free guide that maps out the step-by-step process to build your business credit at creditsuite.com/EIN. You want to get a DUNS number with Dun & Bradstreet. It's 100% free. And then you want to make sure that you get credit with vendors that actually report to the business credit reporting agencies. Just doing these 2 simple things will help you establish a business credit report and score that will help you turn denials into approvals and get you much better terms. And that brings me to the second most common reason that you're going to see loan applications denied, and that's insufficient revenue or cash flow, or the irresponsibility in managing that revenue and cash flow. Look, a lot of the financing that's available today has to do with term loans, SBA loans, merchant cash advances, revenue lending. It's all based on the consistency of your revenue. So what these lenders are looking for, 1, are bank statements that show that you responsibly manage your bank account. They don't want to see non-sufficient funds. They want to see more money going in the account than going out. They want to see positive cash flow. They want to see a positive ending bank balance at the end of every month. If you're doing these things, if they can look at your bank account and see that your revenue is stable or even that it's increasing and that you're managing that bank account responsibly, it opens up and unlocks a lot of different funding options for you. So you've got to make sure that you're managing those bank accounts responsibly and do anything you can to monetize, to have an increased lifetime value for your customer, to have more ways to generate revenue by helping your customers solve more problems. This helps you have greater profit margins, help you keep more money in the bank account, and that goes a long way to getting you approved for the best kind of business financing. And that brings me to reason number 3 that your loan application will get denied, which is inaccurate information or unverifiable information on your actual loan application. Look, more than 50% of all loan applications are denied because your business just doesn't look credible to lenders and credit issuers. Now, this is easy to fix. The first test that they actually do is take your application and compare it to other information that they're finding online. When they find discrepancies, well, then they question the legitimacy of your business. So make sure your Secretary of State, your IRS records, your bank account statements all have the exact same business information. Look, 9 out of 10 times we look at this, the Secretary of State data and the information the IRS has doesn't match what the business owner is putting on the application. So even though you think you're okay in this department, make sure you check. It takes little time to check, and also make sure while you're checking that you're looking at all of your social media channels, your website, and anywhere else your business is listed. This congruency of information is very, very, very important. Once you make sure that the information you're putting on the application is the same as everywhere else that's listed online, then the next thing you want to do is make sure that everything you're putting on the application is accurate and verifiable. The last thing you want to do is put something on an application that's not verifiable and get denied for that reason. So if you don't know the answer to something you're putting on the application, look it up. Don't guess. Don't round. Make sure you're putting precise information, because in a lot of cases, lenders are just looking to validate what you're saying. They're looking to make sure that you're truthful and honest with what you're putting on that application. So making sure that that information is accurate and verifiable is crucial to being able to get approved. And that brings me to number 4 reason that your loan application is going to get denied. You just have too much debt. Look, lenders don't like you to be overextended. They don't like you to borrow money just to keep up with what's going on. They want to know that you're going to take the money and use it to grow your business, not just to survive. So you've got to make sure that you don't have too much debt, that you're wisely choosing the types of loans and financing you're getting. You want term loans. You want SBA loans. You want the longest type of financing that exists at the best interest rate. Now, I get it. In the beginning stages of your business, you probably can't get that. But when you do get that kind of other alternative financing in the beginning, make sure you're paying it responsibly. And when you do go to get better financing, make sure you're consolidating that debt and reducing the amount of overall debt you have, especially the high interest, high risk debt. It's not what lenders want to see. So manage your debt responsibly. And remember, revolving credit is a great tool for this. Business credit, credit lines, this is financing you could use, then pay it down and then reuse it. That's way better than loans that you get and have to start making payments on right away. So make sure you manage your debt responsibly and load up on revolving credit and lines of credit so you have them when you need them, but make sure you're paying those down, paying payments responsibly, and keeping your balances as low as you can. And that brings me to reason number 5 that your loan application is going to get denied, and that's because you're in a high-risk industry. Look, lenders look at your industry to determine a lot of things, including whether or not you should be approved for financing. If you're in a high-risk industry, a lot of lenders won't touch you. The business credit reporting agencies are giving you a harder score. You might even face more audits with the IRS. It creates a lot of problems. So the first thing you want to do is make sure that you're not in a high-risk industry. So go and search high-risk NAICS codes on Google. Make sure that your industry is not in one of those industries. The first 2 results you'll find is NAICS.com, and you'll also find a good blog post from Credit Suite that breaks down high-risk NAICS codes so you can make sure you're not in one of those industries. Once you've done that, the next thing you want to do is go to NAICS.com, NAICS.com, and make sure you do a search for the industry you think you're in. Find your exact NAICS code. Now go to the business credit reporting agencies and update them to make sure that they have your right industry. Make sure that you go to the IRS and your taxes are filed under the correct industry as well. And then whenever you're applying for financing, make sure you put your actual NAICS code name and the NAICS code itself so there's no question of the industry you're actually in. There you have it. There's the 5 top reasons that your business loan is going to get denied. And if you want a lot of options to be able to get financing for your business, grab our free guide at creditsuite.com/27. That's creditsuite.com/27 to be able to get our guide on 27 killer ways to get financing to grow your business. Hey, did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business.